Welcome back to Prajna series. In this segment, Shri Rajesh V. George will take you through the GSTR 1 return, exploring its structure, key components, and the data flow involved in its filing.
Now, once we understood the documents that are there, I always will make you remember that, because I keep hammering this particular concept saying that we use the concept of time of supply. Date of issue of invoice, date of receipt of payment, invoice and payment. Okay, there is another concept that is there in GST, which I just want to make you understand so that I am able to fit in this particular data pertaining to the documents in the GSTR one. How do you fit it in that? That is what we'll try to do. What is that concept? The concept is called as levy. Levy, it is provided under Section 9 of CGST or Section 5 of IGST Act. Section 9 or Section 5 of the IGST Act. Now, Section 9 or Section 5, I'm just going to stick to Section 9 because Section 5 is more or less the same. When it comes to interstate, it comes under Section 5. Intrastate will be Section 9. I'm just going to stick to Section 9 and trying to tell you that Section 9 actually has 3 parts. I want you to remember this. What is actually Section 9 divided into 3 parts? The first part is, which is actually covered under Section 9.1 and Section 9.2. Section 9.1 and Section 9.2, in respect of supplies that are there, Section 9.1, whatever supplies are there, the supplier pays the tax. The supplier pays the tax. And there is a phrase or the term that we use whenever supplier pays the tax, we call it as what is called as a forward charge. We call it as a forward charge. It is very much possible, the next part that is there is what is called as Section 9.3 and 9.4, which I just touched upon if you remember when I was talking about the documents with reference to the reverse charge. If it is notified goods or services from a registered person or goods services from an unregistered person. Now, in respect of that, there is the reverse charge. That means the recipient pays the tax. 9.3, 9.4, the recipient pays the tax. Now, finally, there is an aspect which is called as, I'm sure that all of us have used Ola, Uber. He's an aggregator. They are aggregators. A e-com aggregator that is there. Ola, Uber is there. You also have, it is possible that you have placed supplies for food on Zomato, Swiggy. Very much possible. All of us would have definitely tried that. We would have placed this order. They are all aggregators. Now, when you come to aggregators, there is a distinction. There are aggregators which are specified, and that is under what is called as 9.5. I want you to remember this. 9.5 is the aggregator. It refers to an aggregator. Now, 9.5, in respect of those aggregators or goods or services supplied through aggregators, which are specified under notification number 17/2017 Central Tax Rate. If the goods or services supplied through these aggregators are specified under 17 of 2017, I want you to be very clear on this. I want you, because this sometimes can get confusing. Aggregators, goods or services supplied through these aggregators, which are specified under 17 of 2017, very common example will be Ola, Uber, Swiggy, Zomato. They are very common examples. In respect of these supplies, now how do you relate to this? Now, Rajesh has a restaurant. Chandrakant goes to the Zomato platform, places an order on Zomato for supply from Rajesh. This is the scenario that you can think about. Or it is very much possible that Rajesh has a taxi, he drives a taxi or whatever it is. Now, Chandrakant wants to hire that particular taxi and he goes to the Ola, Uber platform for this. One of those platforms. Through that platform, Rajesh renders that particular service. Rajesh is the actual supplier of the service in respect of the restaurant or the taxi service that is there. But again, it should be specified under 17 of 2017 CTR. Very clear. In respect of such supplies, it is not the supplier who is Rajesh who makes the payment of tax. It is the aggregator who needs to pay the tax. The aggregator pays as if he has made the supply. Now again, it is with reference to only those aggregators or e-com platforms which are specified under, or goods or services which go through these e-com platforms which are specified under 17 of 2017. Now visualize the other scenario that is there. When you say an aggregator, there is an aggregator who is covered under those goods or services which is specified under 17 of 2017, or there is an aggregator other than which is specified under 17 of 2017. Amazon, Flipkart, through whom Chandrakant places an order, Rajesh makes the supply of these pens. Very much possible. Correct? Now, in respect of these aggregators are required to what you call as collect tax at source. They are required to collect tax at source, which is by these aggregators, that is called as TCS, provided under section 52. So when it comes to aggregators, what you will keep in mind is that there are two parts to this. The first part is in respect of those goods and or services which are specified under 17 of 2017 and other than those which are specified under 17 of 2017. If it is specified under 17 of 2017 CTR, Central Tax Rate Notification, then the aggregator needs to pay the tax in respect of the supplies made. The supplier will not be paying the taxes. In respect of those supplies through an aggregator which is not specified under 17 of 2017, the aggregator will collect the tax, but the supplier continues to pay the tax under forward charge. This is the distinction. This is the second concept that I want you to remember. You have the first concept, which is time of supply. The second concept is levy, having three limbs. One is the forward charge, second is the reverse charge, and the third one is the aggregator paying the tax. With this in mind, now let us see whether we are able to fit in this particular data pertaining to the documents into the various tables that are there, or the reason why we have so many tables in the GSTR 1, there is a logic for it. Can we build that particular logic as to why we have these tables and which are those table numbers in the GSTR 1 which actually needs to be filled because of this particular logic. Okay? Now, which is a concept that we use to understand the time of understand the various documents that are there in GST, we use the concept of time of supply. What is the time of supply? The basic part of it is date of issue of invoice or date of receipt of payment. Now, instead of saying date of issue of invoice, I am now going to say there is a supply that has happened. There is a supply that has happened, and the date of receipt of payment, I am going to say that there is an advance that is received. There is an advance that is received. Perfect. I think we are clear on this one. I am using the concept of time of supply. Date of issue of invoice, I am making it as supply. Date of receipt of payment, I am saying there is an advance that is received. We already understood what are the documents that are there with reference to invoice, credit note, debit note, refund voucher, receipt voucher, all that is there. Now I need to put that data pertaining to those documents into the various tables that is there in the GSTR 1. That is what I need to do, and that is what actually is there in the GSTR 1. Okay. Now I am for the time being going to remove this, say that advance is not there, because I'll come back to advance later. I will try to fit in whatever is there with reference to supply. Now, when I say supply, it is very much possible that the supply can be within India, it can be outside India. The supply, any supply, I am taking that Rajesh is a person who is filing his GSTR 1. Rajesh is one of those 1 crore 28 lakh taxpayers who is expected to know this. And I am sure as a department officer and administering these taxpayers, we are also expected to know this. Now, Rajesh is, in respect of the supplies that Rajesh has made, it can be within India or it can be outside India. Now, when it is within India, what are the three limbs that are there with reference to the levy that is possible? Within India, it is possible that it could be a forward charge, it could be a reverse charge, or it could be that the aggregator needs to pay. I think that is what now I am trying to integrate time of supply, that concept, with the levy that is there. When I say a supply happens in respect of this forward charge, now when you say forward charge, you will always remember section 9.1. Here you will remember 9.3, 9.4. And when you say aggregator, you will remember 9.5. Now when it comes to aggregator, you will have to remember it as two concepts. Instead of 9.5, you have to remember it as two concepts. when you say aggregator, you remember it as two concepts. One is where the aggregator pays tax, and the next one is the aggregator collects tax. Very much possible? These are the two possibilities that are there. I am trying to integrate that section levy concept. Now we have to try to bring the tables that are there in the GSTR 1 with reference to these supplies. Now, when I say a forward charge, now Rajesh is a registered person who is making the supplies. In respect of this supplies that Rajesh has made, in respect of this forward charge, it is very much possible that Rajesh makes this supply to another registered person, or Rajesh makes it to an unregistered person. There are only two possibilities that is there. The recipient to whom Rajesh makes this supply could be a registered person or could be an unregistered person. Now, I want to ask you one question. If I were to ask you what is an intrastate supply, if I were to ask you what is an intrastate supply, you will definitely tell me that if the location of the supplier and the place of supply are in same state, then it is an intrastate supply. Now, is it possible that, now this is where I want to bring a small distinction. Now I am trying to tell you that in respect of the documents issued by Rajesh to another registered person, in respect of the documents issued by Rajesh to another registered person, is it required to bifurcate, or you need to specify the details in different tables? That's what I'm trying. The purpose of explaining this is that only. So now, an intrastate supply, normally you will understand, is a location of supplier and the place of supply. If it is in the same state, it is an intrastate supply. Now, is it possible that the location of the supplier and the place of supply are in the same state, but actually it is an interstate supply? Now, system also should know, system also should have an identification or a distinction to make it understand that there is an exception to this particular provision, which says that even though the location of the supplier and the place of supply are in the same state, there is an exception possible that it could be interstate supply. Which is that circumstance where it can be an exception? Again, as I said, I don't have an audience, I cannot ask you, so I'm just giving you the answer. What I'm trying to tell you is, supplies from and to an SEZ is always an interstate supply. So what I'm trying to tell you is, if Rajesh is a supplier who is in the state of Karnataka, state code is 29. Place of supply is also 29. That is, there is another registered person who is based in Karnataka, that is his state code is 29. But if this registered person is an SEZ, Rajesh should not be paying CGST, SGST, Rajesh should be actually paying IGST, or it is an interstate supply. To identify or to facilitate the system, to ensure that only IGST is payable by Rajesh in respect of supplies to an SEZ, now you need to have a grouping, or in respect of all these supplies made to an SEZ. You need to have a grouping in respect of all these supplies made to an SEZ. Now, in respect of all those supplies, now let me give you an hypothetical example. Let me now make you visualize this a little more clearly. Now, if you were to say that Rajesh is filing his GSTR 1 for March 2025. Rajesh is filing his GSTR 1 for March 2025, and in that particular month of March, let us say Rajesh has issued 1,000 invoices. It could be anything. It could be 1 invoice, it could be 0 invoice, it could be 1,000 invoice, it could be 10,000 invoice, it could be 1 lakh invoice. Any number of invoices. Now we have to start visualizing what Rajesh as a taxpayer has to do to put the data pertaining to those documents in the respective tables of a GSTR 1. Now you have to visualize that. You have to visualize a taxpayer with 10,000 invoice, 1,000 invoice, who will be having an ERP to do all these things. You'll have to visualize a very small taxpayer who may be issuing 5 invoices or 10 invoices, who has to go through the same process, know where he has to do, what he has to do. Correct? Now, here is where you need to remember. In respect of this 1,000 invoices, if I were to now say, for the forward charge, there are 500 invoices. 500 invoices in respect of which there are forward charge. That is, the supplier, Rajesh, needs to pay the taxes. Out of this 500 invoices, if there are 400 invoices pertaining to supplies by Rajesh to another registered person. In respect of all these 400 invoices, Rajesh has to enter invoice-wise data in his GSTR1. You need to remember at first. The first thing that you'll remember is all supplies from a registered person to a registered person, which is also called as a B2B supply. A B2B supply, in respect of all B2B supplies, Rajesh has to enter invoice-wise data in his GSTR1. Now, invoice-wise data in his GSTR1 in different tables. How the tables, what is the logic for these tables? The first logic is, if the registered person, that is, this registered person is the recipient. If the registered person is registered as an SEZ, if the registered person is registered as an SEZ, let us say Rajesh has made supplies 50 invoices. He's issued 50 invoices to recipients who are registered as SEZs. In respect of all these 50 invoices, Rajesh has to make invoice-wise entry in a table which is called as table 6B of your GSTR1. Table 6B of your GSTR1. Now, what do you mean? In respect of each of those invoices, Rajesh has to enter it in the table 6B of the GSTR1, invoice-wise details. Whatever details are specified in the GSTR1 pertaining to that particular invoice, Rajesh has to enter in table 6B. Now, you have to remember, it is invoice-wise entry. Invoice-wise entry. Now, the next part is, is there a particular requirement in the GST provision which makes you require the taxpayer identify another group of supplies to a registered person? Very much possible. What is the next reason where Rajesh has to bifurcate those supplies amongst these 500 invoices for a registered person supply, 400 invoices for a registered person supplies into a different table? That reason is what is called as, if Rajesh makes what is called as deemed export. A deemed export. Here is where I want you to remember. A deemed export as per the foreign trade policy and what is provided in the GST provision is a little different. For GST purposes, deemed exports is specifically covered only under what is there in notification 48 of 2017. That's all. What is there in 48 of 2017? Supplies to 100% export oriented units is treated as a deemed export. Supplies against an EPCG license is treated as a deemed export. Supplies against an advance authorization is treated as a deemed export. All specified under 48 of 2017. There may be other things that are covered under foreign trade policy, but it does not apply. Only what is specified under 48 of 2017. I think I have given you three situations. There is one more one which does not come down, but what is specified under 48 of 2017, if there is a deemed export, Rajesh, now let us say there are 50 invoices that have been issued for a which qualify as a deemed export under 48 of 2017. In respect of all these 50 invoices, Rajesh has to make the entry in respect of all these 50 invoices in the table which is called as 6C of the GSTR1. Invoice-wise entry, 50 invoices, invoice-wise entry in GSTR1. Rajesh has to make 50 invoices. I'm sure many of you will be thinking it's already cumbersome. No, there's a long way to go. Again, we need to understand what a taxpayer actually goes through when he files a GSTR1. Now, why do you need to identify deemed exports? If I were to ask you, you will give me many reasons, or you'll come across many reasons that it is actually an export, it is nil rated or whatever it is. But the concept of deemed exports, you need to remember is that Rajesh, in respect of deemed exports, it is not exempted. Outright exemption is not there. Rajesh has to pay the tax in respect of this deemed exports, and then either Rajesh or the recipient, that is the 100% export oriented units, or the supplier who against an advance authorization if it is made, the recipients, or if it is against an EPCG license, either Rajesh as a supplier or the recipients can claim the refund of the taxes that have been paid by Rajesh. So you need to group those supplies pertaining to a deemed export under a different table. I hope it is clear. See, we are talking about 400 invoices which are B2B supplies. That is, Rajesh has made to another registered person. Now, in respect of these 400 invoices that is mentioned, is there a requirement to group them into different tables? The logic for the grouping is that first, in respect of an SEZ supply, despite the fact that the location of the supplier and the place of supply are in the same state, supplies to an SEZ is always an interstate supply and IGST is payable. And the system should ensure that IGST is payable. It is not possible that you cannot leave it to the supplier to ensure that it happens. The system takes care of that particular one. If as long as there is a flag to the GSTIN telling that it is registered as an SEZ unit, the flag will indicate that in respect of this supply, it is actually IGST that needs to be paid. Now you need to have another grouping of those invoices or documents out of this 400 into another table, because they are treated as deemed exports, and deemed exports specified under 48 of 2017. Now, in respect of deemed exports, the supplier or the recipient can claim the refund of the taxes that is paid. Now, because of that reason, you need to ensure that it is grouped into a different table, 6C. So, 50 invoices out of this 400 invoices of this B2B supplies, if it is to an SEZ, it will put under invoice-wise entry in the table 6B. If it is a deemed export, it is invoice-wise entry into a table which is 6C. Now, all the remaining 300 invoices out of this 400 B2B invoices, Rajesh has to put it, I'll call it as others. That is, other than SEZ deemed export made to a registered person, Rajesh has to put it in a table which is called as 4A. Rajesh has to put it in a table which is called as 4A. Now visualize this particular logic. Go back to whatever I told you about the documents that are there. Now in respect of the document that are there, the first document that comes to your mind is invoices. If the taxable value or the tax shown is more, or the taxable value or the tax shown is less, a credit note or a debit note can be issued. Correct? I think that is what we say, a credit note or a debit note issue. Now in the month of April, let us say 50 credit note, 50 debit note has been issued by Rajesh. Now you need to remember that credit note and debit note, it should either increase the if debit note is there, it should increase the liability, reduce the input tax credit of the recipient. If there is a debit note, it should increase the liability, increase the input tax credit of the recipient. Correct? Now, if there are 50 credit note and 50 debit notes that have been issued, and if it pertains to a registered person, now let us say, once you have the credit note invoice, the next document that is there is credit note and debit note. In respect of these invoices, that is, invoices shown under table 6B, 6C or 4A, 6B, 6C or 4A, if there are any credit note or debit note that have been issued during April. Now let us say in this one, there are 25 credit notes and 25 debit notes. In respect of each of this credit note and debit note, Rajesh has to make an entry in respect of this 25 credit note and 25 debit note in a table which is called as 9B. 9B of your GSTR 1. 9B of your GSTR 1. Now, try to visualize what I told you about credit note being issued because the invoice was incorrect. Correct? If you remember, a credit note is issued because the invoice value shown is more. Credit note is issued because the invoice value, that means the invoice itself is incorrect. Now try to visualize what I am trying to tell you. The invoice value is correct. The invoice value is correct, but when the taxpayer or Rajesh's assistant who has made entry in table 6B, 6C and 4A, is it possible that Rajesh makes a mistake in the data pertaining to those invoices? Very much possible that Rajesh, invoice number 1 lakh rupees, invoice issued correctly. But now Rajesh, and I'm just going to give you only one example, try to visualize it, extrapolate it to all this one. If there is an invoice number 1, dated, let us say it is 1/4/2025 because I am doing for April 2025. Now in respect of this particular invoice, the invoice value shown is actually 1 lakh rupees. The actual invoice value is 1 lakh rupees. The invoice also is issued for 1 lakh rupees. Very much possible. It is perfectly correct. But when Rajesh went and made an entry, because this one, let us say, is pertaining to table 4A, that is other category. When he made an entry in respect of this invoice under table 4A, what Rajesh did was that he could have done two mistakes. One is Rajesh could have shown this as 10 lakh rupees, or Rajesh could have shown this as 10,000 rupees. Very much possible. The invoice is correct, but the data pertaining to invoice, when it is shown in the GSTR 1, Rajesh could have made a mistake. Now, in respect of the mistake that Rajesh has made in this particular case, what is the solution that is available? There are two solutions that are possible. Now, if Rajesh notices this mistake before he files, now there are two ways that he can rectify this mistake. One is Rajesh notices it before filing the R3B. Rajesh notices this before he files the R3B. Now in that circumstance, Rajesh can correct this and make it 1 lakh rupees by filing a GSTR 1A. That is, he will file a GSTR 1A. In GSTR 1A, he will go to table number 4A. He will select the invoice number 1/4/2025, wherein he has shown as 10 lakh rupees. Now he will amend it to 1 lakh rupees. If he has shown it as 10,000 rupees, he will amend it to 1 lakh rupees. This is what Rajesh can do. This is the first solution that it is possible for Rajesh. What is the second solution that it is possible? Rajesh has already filed. R3B is over. R3B is filed over. Now Rajesh can go and amend the details in table 4A in the subsequent R1. That is, in the R1 for May 2025, June 2025, or any GSTR 1 that he files till 30th of November 2026, Rajesh can go and make that amendment pertaining to this particular invoice number. Say if he is going to make he doesn't notice it for a year and he notices it only in April 26, now he will go to the April 26 GSTR 1 and the amendment happens in a table which is called as table 9A. Table 9A is a table in which amendment happens in the GSTR 1. If R3B is not filed, the amendment can be done in the R1A of the same tax period. That is, in the April 2025 R1A, it can be amended. So what I am trying to make you understand here is, I am just going to erase this. I'm going to erase this, going back to our table here, table 4A. If there is a mistake in the data pertaining to any of these tables, if the R3B is not filed, it can be corrected through the R1A. But if the R3B has already been filed, that is the GSTR 3B has already been filed, the amendment has to happen in the table 9A of the GSTR 1 of the subsequent tax period. That is, from May 2025 till any GSTR 1 that is filed. The most likely GSTR 1 will be October 2026. Till that particular GSTR 1, Rajesh can go and make an amendment in this one. Now, I want you to visualize the impact of an amendment. What is the impact of an amendment? Now, impact of an amendment on Rajesh's liability. What is the possibility? Even instead of 1 lakh rupees, if Rajesh had shown it as 10 lakh rupees, and in that circumstance, if the amendment happens, it reduces the liability of Rajesh. What I am trying to tell you is, instead of 1 lakh rupees, it was shown as 10 lakh rupees, and now the amendment is done to bring it back to 1 lakh. It reduces the liability of Rajesh in the month in which the amendment happens. If the amendment was through a GSTR 1A, the impact would be that in that same month the liability would have reduced. Similarly, even instead of 1 lakh rupees, if it was shown as 10,000 rupees, if it is 1 lakh rupees and it is shown as 10,000 rupees, if it is amended now to make it 1 lakh rupees, that means Rajesh's liability increases. Rajesh's liability increases. There is a third possibility. Is it the only two possibility of an amendment or the impact of an amendment? No. There is a third possibility which is called as there is no change in the liability. What do you mean by this? Instead of showing Chandrakant's GSTN, I have shown Mahesh's GSTN. Or instead of showing invoice number 1, I have shown invoice number 11. Now what am I doing? I am only correcting other details other than the taxable value of the tax. So there is no change in the liability. So what I want you to remember with reference to an amendment is, an amendment can increase, it can decrease, there can be no change in the liability. They are very much possible. So what are we talking about? We are talking about the amendments that are there. Now amendments pertaining to the data in any of these tables 6B, 6C, 4A. Now come to the credit note, debit note. Is it possible that Rajesh, while entering the credit note, debit note details, Rajesh has made a mistake? Very much possible. Tomorrow you'll keep telling that Rajesh keeps making mistakes. Anyway, we go back to fun. If in case Rajesh makes a mistake in his credit note or debit note details, the data pertaining to the, now you have to visualize. It is not that the credit note or the debit note is wrong. There is something mistake in the credit note or the debit note. No. It is the mistake while entering the data pertaining to the invoice, to the credit note or the debit note. So is it possible that Rajesh makes a mistake with reference to the credit note or debit note? When I say Rajesh, you will always remember it. Any taxpayers out of their 1.28 crore taxpayers. Is it possible that they make a mistake? They could make a mistake, and if they make a mistake, Section 37 provides them that they can correct it. They can correct it, and they can correct that particular entry, which is the mistake which is made in the entry pertaining to 9B. It can be corrected in a table which is 9C. I would only request one thing with reference to whenever you are listening to this particular session or having a look at this particular video, I would request you to have a copy of the GSTR 1, the form GSTR 1, which is keep it in front of you so that you can always relate back to the various tables that I am talking to you about. This is a requirement. The study material gives you a soft copy of the GSTR 1, the various forms that are there. Nothing like having a hard copy is what I have, or if you feel that you have it on your system or on your mobile or tab or whatever it is, please open it, have a look at the various tables that are there. You will be able to relate back to what I am talking to you here in a little more, it will make it more clearer to you. So credit note and debit note data, if there is a mistake in the credit note or the debit note data that is entered, the correction happens in the table which is called as 9C. Okay, now here is where we are talking about the registered person. Now we have to visualize 400 out of this 500 invoices under forward charge. If it is an SEZ, if it is a deemed export, if it is to others, we have to put it into these respective tables. If you make a mistake in any of these tables, and if you have not filed your R3B, you can correct it using a GSTR 1A. But if you have already filed your R3B, then you have to correct it in the subsequent tax period GSTR 1, and that correction happens in the table which is 9A. Any debit note, credit note pertaining to that particular tax period, credit note wise, debit note wise, I think you can sum it up and put those details there. You will have to show it in the table 9B. Any mistake in the 9B before filing an R3B can be corrected using an R1A, and any mistake after filing the R3B is noticed, then you can correct it using table 9C. At the cost of repetition, I am just trying to hammer this concept into your heads. Okay. Now, come to the next part. Out of this, in this forward charge, you have the next part which is supplies to an unregistered person. As per the GSTR 1, supplies to an unregistered person are grouped into two parts. They are put into two categories. Now, supplies from a registered person to an unregistered person is called as business to consumer, B2C. you will have to visualize in GST that when you say B2C, it means supplies by a registered person to an unregistered person. You will have to visualize it like that. We call it as B2C, but you will have to remember that the recipient is an unregistered person. Now, once you tell that the register is one, it is split into two categories. One is called as B2C large, and the second one distinction is it is others. What do you mean by B2C large? B2C large means the supplies are interstate and the value of supply is greater than 2.5 lakh rupees. Okay, and it is greater than 2.5 lakh rupees till I think it is July 2024. From July 2000, that is from August 2024, it is the same condition, interstate supplies value greater than 1 lakh rupees. So now you will have to visualize. Unregistered person, out of this 500 invoices, 400 goes into B2B. Now, in respect of unregistered person, there are 100 invoices. Out of this 100 invoices, now Rajesh needs to identify which satisfies the condition of B2C large. What is condition of B2C large? All interstate supplies, that is supplies to an unregistered person, which is an interstate supply, and the value of supply exceeds 2.5 lakh rupees till July 2024 or August, one of those is one, and if it is greater than 1 lakh rupees from August 2024. Okay, so now if I were to tell B2C large invoice is 25, that is there are 25 invoices out of 100 invoices which pertains to B2C large satisfying this particular criteria. Rajesh needs to enter these details in a table which is called as table 5. Invoice wise details has to be entered in a table which is called as table 5. Now again, if it is invoice wise entry, the invoice wise credit note, debit note details will be shown under table 9B. If Rajesh makes a mistake in table 5, the correction, because it is invoice wise entry, happens in table 9A. Now if you go back to the GST portal where on the system where the taxpayer does it, it will show it as invoice wise unregistered person. That is, it will B2C large. It will be called as B2C large, and in respect of that, but if it is B2C large, it has to be invoice wise entry, that is 25 invoices. Data pertaining to those 25 invoices have to be entered invoice wise in the GSTR 1 in table 5. Any mistake that is made in table 5 before filing the R3B can be corrected using R1A. After filing R3B, it has to be corrected in a table which is 9A. Credit note, debit note details will be in 9B. Any mistake in this will happen in the table 9C. I think this is the logic with reference to B2C large. Now, there is one thing which is called as B2C others. What can qualify as B2C others? It can be interstate, either less than 2.5 lakh rupees or 1 lakh rupees, and all intrastate supplies. That is, intrastate supplies to an unregistered person. Intrastate supplies to an unregistered person. In respect of these intrastate supplies to an unregistered person, now how many are there? 75 invoices are there. In respect of these 75 invoices, Rajesh has to group them what is called as place of supply wise, rate wise. What do you mean? What do I mean by that? Out of the 75 invoices, let us say it goes to Tamil Nadu and it goes to Delhi. And the rate of tax in respect of these supplies could be 5%, 12% or 18% or 28% or whatever it is. Rajesh has to summarize Tamil Nadu wise or Tamil Nadu state code, I think is 32. He has to summarize it 32, 5% how many supplies are there, 12% how many supplies are there, 18% how many supplies are there. So rate wise, place of supply wise has to be shown in a table which is called as table 7. So table 7 is the first table where summary entry is shown and it is not invoice wise entry. Now here is where you need to remember the next part. When you show summary entry, that is, it is not invoice wise, the summary entry in table 7 will be always net of credit note and debit note. What do you mean by that? What do I mean by that? I mean to say that if the invoice value is 100, credit note value is 10, debit note value is 20, what will be shown under table 7, and if all of these apply to 5% tax, so what will be shown in table 7 is actually it will be 100 plus 20 minus 10, that is net off. Invoice value plus debit note value minus credit note value, what will be effectively shown is 110. What I am trying to drive home the point is that there is no separate entry for credit note or debit note when it comes to B2C others. Similarly, is it possible that instead of showing as Tamil Nadu place of supply, I have shown it as Kerala place of supply? Possible. I made a mistake. Should I be allowed to correct it? Yes, I can correct it once. And that correction happens in a table which is called as table 10. I'm just going to erase this. So, just to summarize the unregistered person category, it will be B2C large, interstate greater than 2.5 lakh rupees or greater than 1 lakh rupees. Invoice wise entry in table 5. Once I make an invoice wise entry, credit note, debit note details will be shown under table 9B. If I made a mistake in table 5, I will correct it in table 9A. If I made a mistake in table 9B, I will correct it in 9C. Now that we have understood, I'm just going to erase this, come back to it a little later. Okay, I'll put it a little more one here. It is aggregator. Aggregator pay tax and collect tax. We need to complete this particular sequence that is there. Now here is where I want you to remember. The next part and the next limb that is coming is there is a reverse charge. Now when it comes to a reverse charge, I told you that Rajesh in this particular previous category where there is a forward charge, Rajesh is a forward charge is one. You now there is a possibility that the recipient could be a registered person or the recipient could be an unregistered person. Now with reference to a reverse charge, supplies from a registered, that is I am the supplier, I am a registered person, the recipient is another registered person. It is not possible that Rajesh makes a supply to an unregistered person and unregistered person will be paying under reverse charge. If he is required to pay under reverse charge, it is a mandatory condition for getting registered. So the recipient in respect of a reverse charge supply in this case will always be another registered person. Okay, how many invoices were there? There were totally 1000 invoices. Forward charge we said is 500 invoices. Now let us say in reverse charge, that means in respect of the supplies made by Rajesh during a particular tax period of April 2025, the number of invoices where the recipient needs to pay the tax is actually 100. In respect of all these 100 invoices, Rajesh has to make invoice wise entry in a table 4B. Invoice wise. When there is invoice wise, there is a credit note, debit note, which will be under table 9B. Can Rajesh make a mistake in table 4B? Definitely. He corrects it in a table which is 9A. Can Rajesh make a mistake in 9B, which is a credit note, debit note? In respect of this, here it is, the correction happens in a table which is called as 9C. I want you to visualize this. What I want you to visualize is the fact that once it is a reverse charge liability, the system should ensure two things. One is the liability in respect of this 100 invoices is not required to be paid by Rajesh, who is the supplier. The second thing that the system should ensure is that the liability in respect of these 100 invoices should be paid by the respective recipients. Should be paid by the respective recipients. I just hope you'll remember that. Now, come to the next part that is there, which is the part which is supplies, which is 9.5, which is there. Which here I'm going to just re-put this as collect tax and pay tax. That is, the aggregator collects tax, the aggregator pays tax. When you say pay tax, you will always remember section 9(5). And what is the notification you'll remember? 17 of 2017 CTR. This is the notification that you need to remember. When you come to the collect tax part of it is section 52. Now you need to visualize what I'm trying to say. In respect of this aggregator, now out of this 1000 invoices, 500 has gone here, 100 has come here. Now let us say there are about 100 invoices here. That is, supplies made by Rajesh through an aggregator who collects tax or through an aggregator who is required to pay tax. Two possibilities that is there. In respect of all those supplies made by Rajesh, out of this 100 invoices, let us say 50 invoices involve supplies made through Amazon or Flipkart, which is not covered under 17 of 2017. Now, in respect of these supplies through an Amazon or a Flipkart or whichever e-com portal that is there, the respective e-com platforms only collects tax, whereas the supplier, that is Rajesh, pays the tax in respect of this. Correct? Now, how does it happen? Rajesh, in respect of this, let us say 50 invoices, makes a supplies to all the recipients that are there, any number of recipients, 3 recipients, 5 recipients, and 10 recipients. In respect of those recipients, they could be either registered person or they could be an unregistered person. Now, if you are a registered person, Rajesh should have already shown it here under table, any of these tables. If it is to an unregistered person, Rajesh should have shown it here. In addition to it, Rajesh has to show it in a table which is called as 14A. Now, when this supply happens through an aggregator who is specified under 17 of 2017, in respect of these supplies, who needs to pay the tax? The aggregator needs to pay the tax, and that is specified in a table which is called as table 14B. Can I make a mistake? Definitely. The mistake is corrected with in a table which is, that is, you need to always remember this. Before, that is from August 2024. Whenever I talk to you about R1A, you need to remember that it is applicable only from August 2024. It is not there before August 2024. From August 2024 onwards, it will be R1A if the 3B is not filed. If the 3B is filed in the respective table of 14A of the GSTR 1 of the subsequent tax period, he will make the correction. I think it will be called as 14AA or something like that. This will be 14AB. Now, you need to remember two parts in this particular scenario. This particular table 14 is shown by the supplier. That is, in the supplier's GSTR 1, he needs to show table 14. But there is another table which is actually called table 15. Table 15 is shown by the aggregator in his GSTR 1. It is shown by the aggregator in his GSTR 1. So, when it comes to an aggregator supplies to an aggregator, there is a reporting by the supplier, there is a reporting by the aggregator. In respect of aggregator, where he pays tax, not in respect of the other ones. Where collection of tax happens, doesn't happen there. It is only in respect of those aggregators who need to pay tax in respect of those supplies covered under section 9(5), 17 of 2017 CTR. In respect of this, it is shown under table 15. Now, have we come to the end of it? Are you guys feeling tired? Now, you need to remember 1,28 lakh taxpayers needs to do this month on month, quarter on quarter. So, I think the least we can do is try to understand the logic that is there. The last part of it is that after the reverse charge supply is that the aggregator pays the tax. Now, when the aggregator is paying the tax, you need to remember two aspects of this. Now, the aggregator paying tax, there are two parts to the aggregator. One is the aggregator collects tax and the other is the aggregator paying tax. In respect of all supplies, now let us say that, in respect of these supplies made through an aggregator, out of these 1,000 invoices that were there initially for GSTR 1, Rajesh to enter in his GSTR 1, we have already did, I think, 500 invoice for forward charge, reverse charge 100. Aggregator, let us say about 100 invoices are there. Now, in respect of these 100 invoices that are there in the that Rajesh needs to reflect in his GSTR1, there are two parts to it. Now, the part where Rajesh needs to enter as a there is two parts in a GSTR1. One is Rajesh has to enter those supplies made through an aggregator in table 14, and also the aggregator where he makes the payment of taxes. That is the supplies in respect of which the aggregator needs to pay, he needs to reflect in a table 15. Let me just explain this to you. I hope I'm not confusing you. Okay. Now, aggregator, when it comes to an aggregator, you have to visualize Rajesh makes the supplies through an Amazon or a Flipkart. And these supplies of goods or services are not specified under 17 of 2017. I'm just taking you as an example that in our day-to-day activities, this is what we do. We buy from Amazon or Flipkart or wherever, Paytm or Meesho or whatever it is. In respect of all these platforms, I'm not going to now distinguish between Ola, Uber or anything like that. I'm just now going to tell you that an aggregator, example I'm giving you, in respect of those goods and services which are not specified under 17 of 2017. In respect of those which is not specified under 17 of 2017, in respect of 17 of 2017 CTR, and supplies made through an aggregator. Supplies made through an aggregator, in respect of those supplies, those needs to be reflected. That means the aggregators in respect of these supplies will be collecting tax. In respect of these supplies through an aggregator who collects the taxes, Rajesh has to reflect. Now let us say out of this 100 invoices, 25 invoices pertaining to these supplies made through aggregators not specified under 17 of 2017 CTR, which means that these aggregators will be collecting the taxes. In respect of these supplies, Rajesh would have actually shown them already as a supply to a registered person or to an unregistered person. That is as a forward charge. That means, let us say Rajesh is the supplier making a supply through Amazon, and the recipients are, let us say, Chandrakant is there, Padmaraj sir is there, or Michelle madam is there. Three of them are there who have received these supplies through Amazon or Flipkart. Now you need to remember that Chandrakant, Michelle and Padmaraj sir, all of them are actually recipients who could be a registered person or an unregistered person. Because they qualify as a registered person and a unregistered person, and also the fact that Rajesh has to pay the tax in respect of the supply as a forward charge, Rajesh should have already reflected these details either in 6B, 6C, 4A or in table 5 or in table 7. In addition to that, Rajesh has to show them under table 14A. There is a requirement that Rajesh as a supplier has to show in table 14A. Now, out of the remaining 100 invoices supplies made through an aggregator, let us say 75 invoices. 75 invoices are supplies made by Rajesh to Chandrakant, Michelle or to Padmaraj sir, where the respective e-commerce operators or the aggregators need to pay taxes as provided under section 9(5). In respect of these supplies, Rajesh will show them separately under 14B. That means in these cases, it is specified under 17 of 2017 CTR. That is, it is specified, whereas here in the previous aggregator, they are not specified under 17 of 2017. I don't think we need to spend too much of time there. I think I'm taking a little more time on this. But just remember that when supplies happen through an aggregator, aggregator can collect tax or aggregator is required to pay the taxes. In respect of wherever collection of tax happens, Rajesh has to reflect those details in table 14A. In respect of those supplies where the aggregator needs to pay taxes, Rajesh has to reflect in table 14B. Now, this table 14 is shown by the supplier for supplies made through an aggregator. Now, there is also a GSTR1 which is made available or the aggregator needs to file, and in respect of those entries, in respect of these 75 invoices, only in respect of these 75 invoices, wherever it is the respective aggregators, like for example Ola, Uber, or for that matter, if it is Zomato, Swiggy. In respect of all those consolidated, they have to consolidate the supplies from various suppliers. 75 is only from Rajesh. It could be 100 from Chandrakant. It could be 250 from Michelle Madam. It could be 300 from Padmaraj sir. In respect of all these, they need to consolidate whatever is there. And now those get reflected in a table which is called as 15, table 15. Now visualize this particular aspect. Here I told you that every time you make a mistake, it is very much possible, and the correction happens through a table which is 14A. It will be 14AA or 14AB. Similarly, if the aggregator makes a mistake in the GSTR 1 in table 15, he can correct it with a table which is called as 15A. Now you need to reflect this on this particular aspect just for a moment, because what are the possibilities that are there. Now when a supply is made, I'm just taking this as a diversion here. When a supply happens through an aggregator, I'm specifically talking with reference to table 15. When a supply happens through an aggregator, the supplier can be a registered person, he can be an unregistered person. Very much possible. It's also possible that the recipient also can be a registered person or an unregistered person. That means a registered supplier through an aggregator who needs to pay the taxes, the recipient can be both a registered person and unregistered person. Similarly, if the supplier through the aggregator is done, in respect of this also, it can be a registered person and it can be an unregistered person. These are separately shown under, I think, 15, 1, 2, 3, 4. There are separate tables for that, and the entries are made in these tables. I hope it is clear on that as well. Any question, I think we should be able to answer that. I don't know here because we don't have an audience here. But with reference to the aggregator, what you need to remember is the fact that an aggregator collects tax or an aggregator pays tax. Wherever collection of tax happens, the supplier himself pays the tax. The supplier would have shown it under table 4A, 6B, 6C, table 5 or table 7. In addition, he has to show it under table 14A. Similarly, if it is in a scenario where it is the aggregator needs to pay the tax, the supplier will reflect under table 14B, and the aggregator will, the aggregator was required to pay his taxes, will reflect it in table 15 of the aggregator's GSTR1. That is the distinction between table 14 and table 15. Now visualize this particular aspect. We did 500 invoices for the forward charge, 100 for the reverse charge, 100 for the aggregator. Now we are talking about supplies within India. Do you think that all the supplies that are possible? See, I told you that we build the concept based on our awareness. Do you feel that we have exhausted all the types of supplies that are possible? No. There is one last bit of supplies that is possible, which is actually called as if the supplies are actually nil rated, exempted or non-GST supplies. Nil rated, non-GST or exempted supplies, all these supplies also are possible, and these details, supplies pertaining to nil rated non-GST, will be shown under table 8A to 8D. Will be shown under table 8A to table 8D. Now here is one thing that you need to remember with reference to table 8 is that there is no credit note, debit note detail, and there is no amendment detail that is possible. You cannot amend an entry made in the table 8A. Whereas in the earlier tables, every table had an amendment entry. Isn't it? Yes, there was an amendment entry. What you need to remember with reference to table 8 is that there is no amendment entry that is possible. Now, visualize this particular one. 500, 600, 700, let us say about 100 invoices are there. Now, this exhausts, or these are the possible supplies that can happen within India. Is there any other possibility that you can think of? I don't think there is any other possibility that is visualized or is possible. These are the different types of supplies that are possible within India. Now, come to the next limb of this one. I said supply within India forward charge, reverse charge, and you have the aggregator paying the tax, and then you have the nil rated, exempted, non-GST supplies. Now these are the supplies within India. When it comes to outside India, what is outside India? It is exports. Now when it comes to exports, let's have this continuity: 500, 600, 700, 800. Let us say there are 200 invoices pertaining to exports. Now exports can be for goods, it can be for services. For both goods or services, it can be on payment or without payment of tax. There are both of these are possible. Now in respect of these entire 200 numbers of 200 invoices that are there, Rajesh has to reflect that in a table which is called as table 6A, because it is invoice wise or shipping bill wise entry has to be made, because refund of the taxes paid can be claimed by the taxpayer for the exports made, or refund of the unutilized input tax credit also can be claimed. So these entries are made in a document wise, invoice wise, shipping bill wise, and if he makes a mistake in that, the correction happens in a table which is 9A. You need to remember one thing: despite the fact that there is one common generic 9A table, the 9A table, when the taxpayer goes and makes an entry, it will be 9A table for a registered person, which will be this. 9A table for an unregistered person, which will be this, that will be B2C large, and there will be a 9A table which is for exports. Similarly, once you say invoice, you need to say debit note and credit note comes under 9B, and if there is an amendment in 9B, it happens to the 9C, table 9C. Again, you need to remember a debit note, credit note table 9B, 9C, they are common, but what happens here is 9B for a registered person, 9C for a registered person, 9B for a B2C large, 9C for a B2C large, and 9B for an export is separately made available for the taxpayer in the system when he files his GSTR 1. Now these are the various tables that are there. How many tables that have we covered? We have covered what is called as table 4A, 4B, we covered table 5, we covered table 6B, we covered 6A which is exports, 6B which is SEZ, 6C which is deemed exports. We did 7 which is actually B2C others. We did 8A to 8D which is actually exempted, nil rated, non-GST supplies, and we did table 9A for an amendment entry, 9B for debit note, credit note, and 9C for an amending debit note, credit note table which is 9B, amending the table 9B. So what we have done is sequentially, if you have done serial number 1, 2, 3 of your GSTR 1 will be nothing but a name, GSTIN, and I think the period of the GSTR 1. Now 4, 5, 6, 7, 8, 9 you have done. You also done 10 here, which is actually an amending table number 7. So what you have effectively done is that you have already covered table 1 to 10. In addition, you have also covered table 14 and table 15. You have done these one. So what is left out is table 11 and 12 and 13. What is the concept that I started with? What is the concept that I started with trying to make you understand? You see, if I were to ask you to remember the various tables that are there and why you need to put it, it will never make sense. You know, even if you want to try to recall those tables, you may not do it. You know, it may not come in a sequential manner. But if you are able to remember that there is a concept time of supply and there is a concept of levy, can we integrate these two concepts? Time of supply, specifically for time of supply for services, where the invoice is issued within the due date, and integrate it with the concept of levy under section 9. It is very much possible that we build a logic as to why the respective tables are there in GSTR. That is what we have done. So now, what is the two limbs? What are the two limbs of the time of supply concept? Date of issue of invoice or date of receipt of payment. When it came to GSTR 1, I said, instead of date of issue of invoice, I take it as supply. I take it as supply. Now, and I said, date of receipt of payment, I will call it as advance. Now visualize what I told you with reference to the documents pertaining to an advance. What are the documents that are made available, that are provided as per the GST law with reference to the advance? The first one is, again go back to the example that I gave you. I said the invoice was, at the very beginning, I started with that particular example. I said the invoice was dated 1/4/2025. The invoice was dated 1/4/2025. and I said an advance was received on 28/2/2025. I think my memory serves me correct. This is what I did tell you about it. Now, when you say 1/4/2025, there is an invoice that is issued. For 28/2/2025, when it comes to a service that is there, I told you that it is a date of receipt of payment which is earlier. In respect of this advance that was received, this was 1 lakh that was shown, and this was 50,000. I want you to keep this in your mind, this particular picture in your mind. You need to remember, in respect of this date of receipt of payment which is in advance, Rajesh would have already paid the tax in the month of February. In the month of February 2025. Now, when invoice was issued, now the system should ensure one thing. The system should ensure that only in respect of 50,000, Rajesh pays it in the month of April. I hope you are able to get what I am saying. Now, the invoice value is 1 lakh rupees. Rajesh has paid already 50,000 rupees. Now, when the invoice is issued here for 1 lakh rupees, Rajesh would have already shown in one of those tables pertaining to the invoices. And Rajesh will not be showing the invoice value as 50,000. Rajesh will be showing the invoice value as 1 lakh. Two reasons. The first reason is the invoice value of 1 lakh only is correct. The second reason is when Rajesh paid this 50,000 rupees, tax on this 50,000 rupees, receipt voucher would have been issued, whatever is the receipt voucher that is there. In respect of that receipt voucher, based on the receipt voucher, the recipient cannot claim input tax credit. So the invoice value should necessarily be 1 lakh rupees. The receipt voucher value would have been 50,000 rupees, whatever is that is beyond this one. So I want you to remember that when Rajesh files his GSTR 1 in the month of April, Rajesh has to show the value, invoice value as 1 lakh rupees only, so that the recipient in his GSTR 2A and 2B will see it as 1 lakh rupees and he will be able to take the credit for the full amount of 1 lakh rupees. Whereas, when 50,000 tax was paid on 50,000 rupees, the recipient had not received the goods or services. So he would not be in a position to take the credit of it. I hope you understand this. Keep this particular logic in mind with this advance of this particular example. So every time there is an advance received. Now forget of now.
सर वहीं से लेंगे पीछे से. आपका ना एरिया रिस्ट्रिक्टेड है, तो आप थोड़ा सा ना बाहर जा रहे हैं फ्रेम से. आपका राइट है ना, आप ज़्यादा जा रहे हैं
उधर.
हाँ, उधर मतलब फ्रेम से बाहर चले जा रहे हैं. ठीक है सर, ठीक है. वहीं से करते हैं.
डन.
ओके, 3, 2, 1, go.
Yeah, when Rajesh is paying, now you need to remember this particular aspect. In this particular example, in this 50,000 rupees, Rajesh has already paid in the month of February. When it comes to April, Rajesh has to pay the liability only in respect of 50,000 rupees, but he will be showing the invoice value as 1 lakh rupees. This is what it actually means. Now, how does this happen? Now, let's look at it from this perspective. In the month of February, when Rajesh filed his GSTR 1, Rajesh, in respect of this advances received, would have issued a receipt voucher. Rajesh would have issued a receipt voucher. In respect of this receipt voucher that has been issued, Rajesh will enter those details pertaining to the receipt vouchers in a table which is called as table 11A. Rajesh, that is 11A of GSTR 1 of Rajesh, 11A of GSTR 1 of February 2025. I hope this is okay till now, because I want you to remember this particular example. Now, 11A of the GSTR 1 of February 2025, Rajesh would have this one. Now, what did I tell you with reference to the GSTR 1? I told you with reference to the GSTR 1 that, with reference to the receipt voucher that, once a receipt voucher is issued, there is a possibility that there is a supply or there could be a no supply. There could be a supply or there may not be a supply. Now, when there is a no supply happening, I told you that what needs to be issued is a refund voucher. That is, Rajesh issues a refund voucher. Now, this is what I want you to remember. When reflecting in table 11A, it is net of refund vouchers. What do I mean by that? Say because it is in the month of February 2025, that receipt voucher of 50,000 has been shown, correct? Now, when it comes to, say, in the subsequent month, for whatever reason, either there is no supply because the order has been cancelled and Rajesh returns the money or whatever it is, for many reasons that is there. In respect of that particular case one, if there is a refund voucher, let us say in the month of April, if there is a refund voucher in the month of April 25 for 10,000 rupees. Also, in the month of April 25, there is a receipt voucher for 50,000 rupees. There is a receipt voucher for 50,000 rupees in the month of April 2025 and a refund voucher for 10,000 rupees in the month of April 25. When Rajesh reflects these details in table 11A, what will he show? He will show 40,000 rupees. That is 50,000 rupees minus 10,000 rupees. So that is the practice that needs to be followed with reference to table 11A, and if there is an amendment, I think it happens in one of those tables, there is an amending entry, table 11A1 I think it is. So there is an amendment entry that happens. Again, I want to highlight this. Please remember, there is a lot of time that is spent on making you understand these tables that are there, the various tables that are there. It is very essential that you have a copy of your GSTR 1, at least the form in front of you to understand or to relate to whatever the tables that I am talking to you about, so that you will be able to go back and actually look at the contents of the tables or whatever it is, relate to those tables. And I also want you to remember why we focus so much on the GSTR 1. Trust me, GSTR 1 is what is called as, to my understanding, I would call it as a return of primary data or a statement of primary data, whichever way you want to call it. It's a detail of outward supplies, but it is a return of primary data. The return of primary data, which is GSTR 1, the data that is there in the GSTR 1 auto-populates GSTR 2A, auto-populates GSTR 2B, and auto-populates majority of the entries in GSTR 3B. It also auto-populates entries in GSTR 9. What I am trying to tell you is, auto-populated entries are should be entries which should not be editable, but for whatever reasons, presently it is possible to edit. But there is no separate user entry required in an ideal scenario, that there is no user entry required in a GSTR 3B or a GSTR 9. There is no user entry possible in a GSTR 2A or a GSTR 2B, but whereas in a GSTR 3B, data that is auto-populated from the GSTR 1 auto-populates the GSTR 3B, and it is data it's a primary data auto-populating into the 3B and the 9. So what I'm trying to also drive home the point is, despite the fact that we say that there is a GSTR 1, a 2A, a 2B, a 3B or a 9, whatever we say, I want you to remember that it is only the effort that goes into the GSTR 1 that a taxpayer puts in. If the GSTR 1 entry or the data pertaining to the GSTR 1 is correct, it auto-populates the 2A, 2B, 3B and 9. And it is not required that the user has to even bother to even make a correction or an entry as well. That is why the focus or the tremendous amount of effort and time that goes into making you understand what is actually there in the GSTR 1 and the reasoning why the data is so reflected in the GSTR 1. Go back to this particular example here. So 11A is always the details of the receipt voucher and the refund voucher that is there. Now, receipt voucher when an advance is received, refund voucher when after receipt of the advance and a receipt voucher is issued, no supply happens, refund voucher is issued. So 11A will be a net off figure of receipt voucher and refund voucher. Now visualize the next scenario that is possible. Once a receipt voucher has been issued for 50,000 rupees, now you need to visualize this. This is in the month of February, correct? In the month of February 2025, I have made an entry in table 11A. For 50,000 rupees, and whatever is a liability pertaining to those 50,000 rupees, the liability has been paid. Now, in the month of April, the supply happens, and the supply, in respect of this supply, there is an invoice issued for 1 lakh rupees, which I would have already reflected in one of those tables, 4A, 4B, 6B, 6C, 5 or 7, whichever tables, I would already reflected that as well. Now, to ensure that, because whenever I am showing the invoice value, I am showing the invoice value as 1 lakh rupees, but 50,000 rupees tax in respect of 50,000 rupees has already been paid in the month of February. To ensure that the system does not calculate tax in respect of the entire 1 lakh value. Now, in respect of that amount, in respect of the receipt voucher for which a supply has been made and an invoice has been issued, in respect of that particular supply, along with making an entry of the invoice in one of those tables, the taxpayer has to also show what is called as advances adjusted. That is 50,000 rupees advance on which tax was paid in the month of February. It has to be shown as 50,000 rupees in table 11B of your GSTR 1. Now this ensures that once you say that advance has been adjusted through the issue of an invoice, now the system knows that in respect of whatever is the amount shown under 11B, tax liability has already been discharged in a previous tax period. What it will do is, despite the fact that 1 lakh is shown in the invoice in one of those tables, it will actually treat it as 1 lakh minus 50,000 while computing the actual tax liability. I hope this is clear. So what we have now done is, we have done table 1 to 11, table 14, table 15 of your GSTR 1. You have the last two tables that are there, which I'm not going to spend too much of time on that. It is what is called as HSN entry. And HSN entry also, I just want you to give you a small information that is there in the HSN entry that is there. The part that I want to highlight in this is that there is, I think, phase 1, phase 2, phase 3. From April 2025, we follow the phase 3 reporting mechanism that is there. Now, the HSN in details have to be captured, and there is what is called as table 13. And table 13 is nothing but the details of the documents that have been issued during the tax period. Details of the invoices issued, serial number from 2, debit note from 2, credit note 1 from 2. Any have been cancelled, you need to reflect that. So even the document so it also gives you an indication as to what are the documents that are possible in GST. I spoke to you about the various documents that are there. Those documents which have been issued, the data pertaining to those documents have been reflected in any of these tables that are here. You need to also show the details pertaining, that is only the serial numbers of those invoices or the debit notes or the credit notes or the receipt voucher or the refund voucher that is there. You need to show it in those invoices. So that is what is the entire GSTR 1 that is there. If I were to just pull it down, let me just try and, it's possible to condense this and bring it into one slide. This is actually GSTR 1 for you. GSTR 1, table 1 to table 15. Table 1 to table 15, this is the entire GSTR 1 that is there. Now, with this, I want you to, because I think I spent about 2.5 hours talking to you till I reached GSTR 1. Now, the remaining part of this particular session, I want to highlight a couple of other aspects that is there before I go into 2A, 2B and 3B, which will be the next part of the session. Before I want to conclude on that particular aspect, I just want to just also see what we spoke about, because I used a board largely to explain these concepts. Now, if I were to ask you, I told you that GSTR 1 is a return of primary data, and it has to auto-populate the GSTR 2A and the 2B. It has to auto-populate the 3B also, correct? Before it auto-populates the 3B, it actually auto-populates the 2B, and from the 2B, it auto-populates the 3B. That's how it does. Now, the GSTR 1 directly auto-populates the 3B for the liability. That's how it works. Now, if I were to ask you, looking at these tables, data from which table should auto-populate GSTR 2A and 2B? Or if I were to ask you in a more simpler form, data from which table need not auto-populate GSTR 2A and 2B? I'm just trying to tell you that you have an entry made in table 6B, 6C, 4A, you have table 5, you have table 7, you have table 4B, and then you have table 14A, 14B, you have 8A, 8D, 6A, and all these tables are there. Data in the GSTR 1 is there. Now, I tell you that, data pertaining to, should it be that data pertaining to all these tables should auto-populate into GSTR 2A? Should it auto-populate all these tables into GSTR 2B? Or is it sufficient that only certain tables should auto-populate? Let me tell you that there is no relevance for data pertaining to supplies to an unregistered person getting auto-populated, because you don't have a 2A, 2B for an unregistered person. So what I'm trying to tell you is data pertaining to table 5, table 7, 9B, 9C, which is pertaining to an unregistered person, or table 10, which is pertaining to an unregistered person, or 8A, 8D, for that matter, even the export details or whatever is there need not auto-populate into the GSTR 2A or the 2B. So effectively, which table will auto-populate? Effectively, which table will auto-populate? Tables pertaining to supplies from one registered person to another registered person only auto-populates. What do you mean by tables from one registered person to unregistered person? Now visualize the picture that was there in your mind. What is the picture that is there? When you say a registered person, it can be, now just bring it to the other one. It can be a forward charge, it can be a reverse charge. If you say it is a forward charge, it can be either, what is possible in respect of a forward charge? You have an SEZ, you have a deemed export, you have others. And reverse charge, you have only two. In respect of this, there is no separate categorization. Now, tables SEZ will be table 6B, 6C, 4A, and this will be 4B. If there is, what is the amendment entry here? The amendment entry is table 9A, debit note, credit note details is 9B, and amendment to that will be 9C. Similarly, it will be 9A, 9B, 9C. Data pertaining to these tables alone auto-populates as part A of GSTR 2A and what is called as serial number 31 of GSTR 2B. GSTR 2A and 2B I'll be talking to you about a little later, much later, but I just want you to visualize. What I kept telling you is that GSTR 1 is a return of primary data, and this primary data has to auto-populate 2A and 2B. Despite the fact that you have tables 1 to 13 or 1 to 15, you don't need to auto-populate that. You definitely need to auto-populate even actually one more table that is there is the aggregator one wherein the credit has to come. I think it is table 15. This also has come. This again is a new furious one. This also has to auto-populate into it. Now, when it comes to 2A, 2B, these are the tables that auto-populate. When it comes to 3B, the liability pertaining to all these tables that are there from 1 to 11 is in some form either an increase in liability or there is a decrease in there is a liability created which could increase, decrease based on the amendments, debit note, credit notes. All those will become a liability in the GSTR 3B, in the liability part of the GSTR 3B. We will touch upon all that a little later, but I want you to visualize this. What I'm trying to highlight is when it comes to 2A, 2B, it is only the data pertaining to these tables that will auto-populate. It will not be any other tables that will auto-populate.
In the next session, Rajesh V. George will take us through the concept of invoice management system and will explain it in detail.